Hello and welcome to another episode of Xpandable with Fibonacci X. Xpandable is a series of conversations with investors and operators where we try to demystify the process of venture building. Hopefully you find these conversations useful. Please subscribe to our channel. Thank you. Today we have Karan Mittal with us, and Karan Mittal is managing partner at Caret Capital. He's also partner at EV2 Ventures. He's currently serving on the boards of several early stage startups including Alt Mobility, EVs, and Mobile, etc. He focuses on investing in early high impact opportunities including electric vehicles, logistics, technology, micro-mobility, agri-supply chain, and warehousing. I'll let Karan add more to this about your current role and what you are currently involved in.
Thank you, Kulmani, and thank you, Fibonacci X, for having me here. It's a pleasure. So I can start by my journey just to give you a background of what I've pretty much done. I've actually started my career in investing, so everything and all that I know is investing. I started investing from private equity in infrastructure assets, then moved on to investing in renewable energy assets. After that, I was investing across impact, post which I was part of a family office where I was running their real estate piece. And then I got the opportunity to be part of a global venture fund called Velos, where I was leading their global investments across consumer tech plays.
Right.
After which I set up my own fund, which is EV2 Ventures, focusing mostly on mobility, or what we call smart mobility. We defined this primarily as anything that helps move people and things and the technologies around it. And we realized that India is going to go through a large transformation in the mobility space with electric vehicles becoming mainstream over time. As well as the lack of a mobility fund in India. Globally, we had, Trucks VC, Autotech Ventures, Manav Mobility, but India had not seen a mobility fund focusing specifically in this area. And with the transition of electric vehicles, or let's say the automotive industry evolving, we sought an opportunity to enter the space.
Which year was this when you launched EV2?
We launched EV2 by literally at the end of 2019. So warehoused a couple of investments initially, and then started investing actively, 2020, 21, during the COVID era, which obviously was far more difficult from a fundraising perspective. And making investments, but everybody understood the importance of logistics and supply chain during those 2 years,
Right.
which catapulted our thought process or our thesis to the next level.
Right. And through EV2, you invested in how many companies?
Through EV2, currently we have a portfolio of about 11 companies odd. One transaction, the website, etc., everything on the public domain is 10. The 11th one is unnamed only because the wire has not gone through as yet due to delays of the lead investor. But that is separate.
Right.
But yes, it's 11 company portfolio. The thesis evolved from, let's say, investing across electric vehicles and the entire value chain or ecosystem of electric vehicles. Then the use case of electric vehicles, which is logistics, supply chain. That is everything from plant, yard, first mile, mid mile.
Right.
And taking that further into the ancillary pieces, which is warehousing tech, along with agri supply chain. I mean, India's largest agrarian economy.
Right.
So we cannot ignore that supply chain, as well as finance and aftermarkets. India is also the third largest automotive market. So aftermarkets is huge in India as far as we see it. But if the existing industry is going to get disrupted on an overall basis, what we will see is that every component or every piece of this at some point in time will get disrupted.
So before this, you were doing real estate, other asset classes.
I've luckily had the opportunity to be, investing in various asset classes.
Right. So how did you stumble upon EV after all those years?
So VC, investing is not about, as far as we understand it, and investing is not about, let's say only what you know, right?
Right.
Investing is about what is the next big opportunity. It's the macroeconomic opportunity that the underlying, or let's say the overlaying macroeconomic opportunity and the underlying sectors that that will feed that macroeconomic growth.
Right.
So if you're in the right sector, right stage, I think returns would definitely be there to be made.
Right. Right. But I see two kinds of people. Some investors always tell me, I only touch this because I actually understand this and I can value it. But probably that won't work in venture, right? Because venture is about future, inflections about future, right?
Historically, venture was designed, it's not an Indian concept, right? It was
Right.
obviously came in the
Yes.
US during the dot-com bubble. Venture was designed for investing in disruptive technologies. The idea of venture was you invest in anything that will change the landscape of what already exists.
Right.
How can you do that if you don't know it? Or let's say if a person knows it, let's say the question that you're focusing on is, if I only know this, then how
Right.
can I invest in disruptive technologies that are not even present?
Right.
So and that's where this thought actually stems from.
So when you entered EV, what surprised you, or what were your initial learnings?
So when we entered the EV industry or the segment investing in this, it was absolutely new, right? Negligible penetration, 0%.
Right.
Not even a vehicle on the road. I think one of our first investments was a company, Euler Motors, which actually started putting vehicles on the road. So the key problem that we wanted to address was adoption. And as we evolved into investing, we realized that we can't make singular investments in this space. Our learning will be too weak. We will not be successful. So therefore, we have to follow a value chain or an ecosystem approach.
Right.
It tantamounts to putting almost all your eggs in one basket, but not exactly the same. So what we told some of our investors was very interesting, that if you feel that the EV industry is going to be the next, growth factor, for, let's say, the automotive sector or India as a country, then deploy capital. If you feel that the EV industry is not going to, perform, or there is no future for the EV industry, then I think you're probably investing in the wrong fund.
Right. And how easy was it to convince all the LPs in the beginning?
Very difficult. Almost impossible. Right? It took us a lot of time, but I think the market dynamics helped us over time. Right? We've seen penetration grow from 0% to almost 7% today, and globally, European countries, US, everywhere, etc., it's about 14-15%. Still, much higher. But India as a country, I think India as a country obviously did not have the infrastructure capability. So those questions were difficult to answer. Do you think, how will India develop infrastructure? We didn't tweak our thesis, just to be clear, right? Our thesis was formed, it was well thought out, and we focused on making investments in the commercial side of, let's say, EVs, not
Right.
on the consumer side. And our thesis continued to evolve in the commercial aspects. And this is something which we were able to defend with our LPs. That even though infrastructure does not exist, India's policies may be, a certain manner that may not favor, let's say, commercial aspects, or may favor the consumer more. We will still be able to create relevant business models in this space.
Right. And because the ecosystem did not exist, how easy was it to hunt for good deals or good founders you can back?
I can give you a little bit of statistics. We were looking at 1,200 companies a year.
Wow.
So I would say that the industry really picks up on signs of where, things are going next.
Right.
So it's not that the industry does not do that. So it's just about whether you're able to catch those opportunities or not. I mean, India is very entrepreneurial today. I mean, it's unbelievable. The kind of entrepreneurs today, the kind of risks that, young boys, even, veterans are willing to take is unheard of in the earlier stage. I mean, when I was doing private equity, we hadn't heard, any sort of, let's say entrepreneurs come up and create these kind of, companies.
Right. I remember when I used to do private equity consulting, probably around 2013-14, the total deployment in PE market was around 20 billion for the whole year. I remember reading the Bain annual private equity report because I used to read that like every year and see what is happening. And now I think if I just look at early stage, it's like 3-4 billion per quarter.
Yeah.
So that is early stage in itself is like 12 to 15 billion. So overall PE will be probably multiple times that, right?
So PE, obviously the check sizes were larger,
Right.
the opportunities were very different, established companies. It was always growth capital.
Right.
Right? This is early stage capital. You're completely looking at it from a very different perspective. So having said that, though our strategy actually has been, we've applied a lot of private equity principles in venture, but that's only for the evaluation piece, with a little bit of tweaks, obviously. Not all of them will work.
Right. Now, fast forwarding from, let's say, 2019 to now, 2025, how do you see the potential in EV market in India?
So let me start with some statistics, right? Rather than giving you offhand information, right?
Right.
The EV industry today sits at about $35 billion, $40 billion ballpark, right? We made 10 or 10, 11 investments in this space.
So 35 billion, that is the money invested.
No. That's the overall industry size.
Okay.
Right. It's not extremely large still. Right?
Okay.
It's still small, but we invested in about 10 odd companies in over 2019 to 2024. It was, and we chose to discount 2 years, which we didn't get because of COVID. We avoided making as many investments.
Right.
After 5 years of the fund, we still have 100% portfolio hit rate. We have zero write-offs on our portfolio. The economics in this industry works. I think that's the primary reason why this industry is relevant. Where, unit economics is positive, and at scale, it's lucrative, is what I would say. But having said that, we could see that energy is the new oil, right? So,
Right.
Which in itself is the base for the evolution of this industry. So we divided this industry's growth in 3 phases. We said that the first phase is going to be adoption. We will invest in anything that helps, or we will look at plays within our sectors or subsegments that help in the adoption of the industry.
Right.
Or adoption of electric vehicles, to be correctly put. And then we said the next phase, which is phase 2, which is where we're investing from our fund 2 now, is mostly on the technology aspects, which is components, battery recycling, like going deeper into this ecosystem to see
Right.
what will help, further strengthen the base. The third piece is where we feel that consumers will really pick up, which is obviously the largest market. Though, I mean, commercial aspects or commercial market is smaller than, the consumer market. But that is how we look at it, right? The third phase is consumer, where we will have the infrastructure set up, where we will have enough, let's say, OEMs, enough component manufacturers. Like we see the existing automotive industry transition, not entirely, but, substantially.
Right.
Having built the same ecosystem that has already been built for the, let's say, ICE, internal combustion engine industry.
So if I look at, let's say, four-wheelers currently, ICE versus EV, I think currently we should be 1-2% EV at this point.
Very substantially low.
Substantially low. So at what percentage do you think this ecosystem will mature and will have similar kind of supply chain, etc.?
Well, it's said that once any industry reaches 5% penetration, it is a substantial industry in itself.
Right.
So we have crossed that mark. That's a great, let's say, mark for us too. Some numbers from around this is India sells about 24 million vehicles overall, ballpark. 20 million out of that is two-wheelers, right? So we're pretty much a two-wheeler economy. We're the largest two-wheeler globally. So that's one. And the rest is all, four-wheelers, three-wheelers, etc. And each piece is pretty large in itself, but 20 million two-wheelers is the largest portion.
Right.
Where does the commercial aspect actually play a role is the gig economy, the gig riders for, delivery, for the delivery ecosystem. For Zomato, Swiggy, Zepto, all these players are pushing or would prefer to shift their fleet or their gig riders to use electric vehicles. I think there are about, 7 million or 9 million odd, gig riders across the country, which is expected to grow overall to about 20 million. So from an overall perspective, even the government's mandate or target is, 30% penetration by 2030.
Right.
And I think it's definitely achievable, even without, touching the consumer market.
And do you think personal two-wheelers will also see similar kind of shift?
There are a lot of people, they eventually, once the infrastructure and battery technology evolves, yes, definitely there will be a shift. It's a complete no-brainer for any person, right? The cost of fuel, at least in a four-wheeler today, and we come to two-wheeler, but at least the cost of fuel, a monthly fuel cost is equivalent to, your EMI of a vehicle, almost, of electric vehicle.
Right.
So it is crossing everybody's mind. It is anxiety that is not allowing people to take that shift.
So the range anxiety, basically.
Yes. And obviously the access to infrastructure, where we invested in one company that does wireless charging. He's able to charge from a 25 centimeter distance wirelessly. If let's say real estate companies are able to embody this company and, just lay their entire basements with wireless chargers, you just park your car over it, it'll automatically start charging. The effort to, charge a vehicle will, reduce over time. So when ease, or let's say when use of, convenience comes into play, then automatically I think the shift will take place.
Right.
There's also one company that we've invested in that does autonomous swapping for four-wheelers or let's say larger vehicles. He's got bots that, go underneath the vehicle. He's built a skateboard battery, go underneath the vehicle and, swap the battery in less than, let's say, 3 minutes. So that's, let's say, even faster than filling fuel.
Right.
So it's not only about cost parity, it's also about time parity. So when both of these aspects will align, we will see a huge shift.
Yeah. So, 3 minutes because you have to stand in the line. Usually. The actual filling is like full tank.
How much time do you take to get a full tank done?
Yeah. Probably you're right.
So,
depending, if you have a smaller car, you're doing like 37, 35, 40 liters.
Yeah.
And a bigger car, 60 liters. Yes.
Yeah. But let's say, even if you stand a minute extra or a couple of minutes extra, it's not gonna change the dynamics.
Right.
The point is a few minutes versus a few hours.
Yes.
I think the difference is there.
Plus the economics.
Yes. Plus the economics.
So that's the combination. Uh, so for this charging infra, right, whenever we have, let's say, widespread wireless charging, or now I see even probably in near future we'll have petrol pumps having charging points, etc. Right. If you look at the power required to sort of, have these massive infra set up and working, what kind of changes do you think as a country at the power grid level or at the generation level or installed capacity, what changes do you think we'll need to make?
It's very difficult for me to answer in terms of what kind of changes do we really need. But I can tell you we took out a white paper on this because this is a regular question. Not exactly specifically your question, but related to that, right? The questions have been that does India have enough energy? Does India have enough power?
Right.
So we actually are expected to be a power surplus country. We today have 40% installed capacity of renewable energy. Obviously, the usage is, let's say the connection to the grid, etc., is lower. But having said that, we do have, and we're still expanding that.
Right.
What we definitely need is, laying three-phase lines across the country. So it's distribution of energy rather than installation of energy only, and seamless distribution.
So my understanding is that 80% of power we are generating is thermal or coal.
Coal, yeah.
Yeah. And renewable cannot be effectively stored at this point at scale.
Yeah.
Except if you talk about hydro, because there is that energy
yeah.
and different you can create. That potential is stored. So the baseline still has to be thermal.
But this is extremely interesting, and the reason is that the evolution towards electric vehicles is also a base for energy storage. Battery, or let's say battery technology, is the key factor that will help the country actually create energy storage opportunities. It in itself is a very big opportunity, for investment as you understand it. Because every time you will see, any battery station, I'd just like to call it that, I don't know what it'll be called, but anytime you see a battery station, you'll realize that a lot of batteries are stacked up.
Right.
And all those batteries are obviously getting power fed, but if they have substantial amount of batteries there, it can form for it can create an infrastructure for energy storage as well. And this will also bring the opportunity of back to grid.
Giving back to the
grid, right? So the grid stores energy in the batteries, and while obviously the sun is shining, and then obviously it gives back to the grid when needed because energy is stored in the batteries. So and those batteries obviously effectively are used for various other purposes, which is automotive, etc.
Right. And so just for my own knowledge, I'm curious, how do you see the battery technology evolving? What is the current state now? I don't know what kind of batteries do you think you are betting on?
So we've stayed a little clear of investing in batteries. Chemistry is evolving, right? Now, if you look at it today, the cost of battery is actually reduced. Cost of lithium has reduced drastically, therefore bringing parity with the lead acid battery. But lithium today is the primary form of battery technology. China is obviously leaps and bounds ahead of the entire globe, right?
Yes.
But and India is trying to create manufacturing capacity for lithium cells. Let's segregate this because it gets confusing otherwise. Cells versus batteries, right?
Yes.
So create capacity for cell manufacturing, etc. And then over and above that, then there is battery pack technologies that go into the battery pack. We're still, most of it, we're importing cells. We're only creating battery packs here. So still reliant on Korea, China, etc. on on the cell technology.
And do you see that changing? Do you see we will develop our in-house capabilities in future?
We need to, irrespective, but I think it requires a lot of capital, right? Each cell manufacturing plant is requires, a couple of $1 billion maybe to set up, etc. And for the
Right.
scale that we need. I think the low-hanging fruit here is battery recycling, because the existing cells, now that the lithium is already in the country being used, so can you extract those minerals and reuse them
Yes.
rather than trying to create another, cell manufacturing capacity.
Yeah.
China actually, or Caret, one of their leading cell manufacturers, gave a statement that by 2057, I believe, they will not need to mine lithium ever again
Probably there
because
won't
of
be
battery
any.
recycling.
Probably there
No,
won't
because of battery recycling.
Okay.
So they're saying that our recycling capabilities
Will
will
be
allow
so-
us, and they will be so superior that they'll allow us to, take care or, cater to the entire demand.
Got it. So before I was just reading today about the cost differential between ICE and EV vehicles, right? So there was a nice chart where they had indexed. So on the x-axis you had the time, on the y-axis you had the index values.
Yes.
So China was the country where it's like almost they have brought the cost almost similar. If you buy a EV vehicle or a ICE vehicle, it's almost same. I think India, the differential was the highest versus other countries. So maybe some data I didn't look into.
But the TCO still is very lucrative, the total cost of ownership. For a three-wheeler commercial vehicle or a four-wheeler commercial vehicle like an L5, we break even in about 18 to 20 months. And, about 18 months for a two-wheeler. The only scenario that you need to look at is the use case. You have to sweat the asset as much as you're able to sweat the asset and, let's say, make money from it. It's completely viable.
Right. I think that will evolve. About the recycling, right? So I was recently speaking to a founder who is probably doing lithium-ion battery recycling, and he told me that there is this cyclical nature of commodities market, which sort of influences his business as well.
Yeah.
Right? How much batteries can he buy from market? How much is he recycling? At what price is he selling? So I think that makes it not that straightforward business to be, because then there is speculative risk, right? Because it's his call. I don't want to sell right now.
So today, as of now, all battery recycling is mainly a trading business
Yes.
because of they extract black mass and they're selling it. We need to go down to extracting all the minerals and then evolve this into the second life of the battery, create our own cells and battery packs. We still haven't completed that cycle, and therefore you see the cyclical nature of the business. Otherwise you would not see it in this manner.
Yeah.
So we're still halfway where we're only selling black mass. So you're and that a lot of it is sold in international markets. I remember there was one article where the government said that you cannot export black mass, and I honestly have not followed to seeing where that situation is today. But the reality is that is where everything changes once that cycle will complete. Is that yes, we've developed capabilities to create cells, extract minerals, create cells, put them back in the market. Complete the circular economy here.
Right. Because currently the negative side of trading business is it's not fundable because it's too much one person's call.
Historically, neither private equity nor venture has ever funded his trading businesses.
Right.
So
It won't make
the
sense.
margins are too low.
And there is too much risk.
Yes.
Right. Because you may not get the timing right and then you are done.
Absolutely.
Right. So there is no stickiness in that sense. What are some of the areas within EV where you feel founders could still create value, or some areas where you feel that these are like sunrise areas within the EV ecosystem in the coming years?
The short answer to that is every component that goes into an EV. We're importing, let's say, IoTs, controllers, where we don't have some OEMs are still importing the drivetrain or the powertrain. We still need powertrains locally built with let's say new age technology, including battery components, etc. So
Right.
there is definitely a huge opportunity in this space.
So you think the supply chain, the traditional automotive, I mean, by the time you reach like tier 3 supplier, you're talking about 30,000-40,000 supplier or something like that, right? You go tier 1, tier 2, tier 3, you think EV will also be like similarly complex?
There are about 1,500 moving parts in an ICE vehicle versus, let's say, 150 moving parts in an EV. So I do not believe that it can be that complex. But I definitely believe that product technology around each and every of these products will evolve.
Right.
And technology forever is evolution, right? So there is no doubt about that. It's just those companies who are able to continuously evolve into better technology or have good R&Ds will I think have the upper hand.
Right.
And now you cannot have a substandard powertrain or a substandard battery. It's literally your engine of the vehicle. Without taking names, if you say today X, an X car was in the ICE category versus a Y car, why do you say X is better than Y? Right? I think it's a lot to do with the engine. It's a lot to do with build quality is one piece, but the engine, or let's say their technology that they use. Now let's say Honda uses VTEC, etc. So you've subscribed that this is a better technology, works better. Now over here, if you have a battery pack, or let's say if you have a substandard battery pack, it's going to affect your range, it's going to affect your charging, it's going to affect everything that that your entire vehicle is made of. So you cannot have a substandard engine, is how I would like to put it.
So that engine technology, that's something which so far we have imported from outside, or this is something where you think India will develop in future or not?
No, we're already developing.
Okay.
So we're already developing things. We're still in the phase. I won't say that we have, like we're still not developing cells, but we're developing battery packs, internally in India. We're also developing, powertrains in India.
Yes.
The only thing is that we still have to achieve economies of scale. We still have to achieve a better, let's say, technology substantially that is, superior to what you can import.
Right.
And both these pieces work hand in hand. Also, the piece that connects both of them, the controller, is equally important, because your BMS, your controller, all of them, they make both of these pieces talk,
Right.
and eventually help the vehicle move forward. But that is what is extremely important for this industry to evolve.
Right.
So it's not one piece that can solve this problem.
Correct.
It's multiple of these pieces, and there will always be multiple companies that will develop, different kinds of technologies for this. And I think in any case, there is no one OEM no OEM will source from one vendor. They will have multiple vendors. So there will always be an opportunity for a player. The only thing is, will it go down or detail to the level of tier 1, tier 2, tier 3 suppliers? It is yet to be seen, because there are not that many components.
Plus the threshold in terms of the overall vehicle sale is still less. So we don't know how will that work.
If we achieve 30%, we're pretty substantial, and we will definitely see a lot of companies in this space.
So if there was a young founder, let's say, because we are in the acceleration space, right? We meet a lot of founders who are at, let's say, idea stage or pre-revenue. They're just jamming. We meet them, we help them in shaping the idea, right? If someone wants to build an EV, right? What do you think will be the founder fit in terms of skill set, or how should they think about, let's say, you said component level or something else, right? So one of the key learnings which I have had with EV is that probably in future you need a founder who knows a little bit software as well as the hardware, right? Because some of this you need to know the real hardcore engineering, right? Let's say at the cell level or even at the component level, right? That's my hypothesis. I don't know if that's correct or not. But what do you think if there is a founder trying to build or thinking about building something in EV? What will be your advice when you are, let's say, you meet a founder? Then how will you screen, etc.?
So it depends on the component he's targeting, obviously, right? I'd say that many founders in the space will be new, and they will not have the entire exposure towards, let's say, building this. They would have probably built, some pieces around this in various other industries, right? Whether they come from the automotive industry or whether they come from new age, let's say, companies that are building or that have already built OEMs. It's definitely it's definitely a very unique proposition for everyone. So we are looking, let's say, today at a battery recycling company, and founders are very young, but
With no prior experience
little bit of prior experience
in
right?
manufacturing,
in
or
manufacturing,
Okay.
etc. Right. For us, what's important is what we were trying to see over here is that does he have the right mindset for creating this product? Does he understand the technology behind it? Right. So obviously engineers are preferred, right? Because
yeah.
that's a given. But does he have the right mindset? Is he building the right business model? And success and failure of the investment of the company will actually be dependent on his execution, which today I cannot predict. We have to, sometimes you have to take a call on that, whether, the founder has the capability to execute his business model. It's very, very, difficult. So, because there's a lot of on-ground activity. So every founder that that we have been, let's say, aligned with, we like to see that they have the capability to execute. And this is the first thing that we tell them, that will you be able to execute this?
And how do you check for that?
So most of the times we're not doing that early where the product is not ready. We're doing, products that are, let's say, prototype at least. I mean, we don't do that early. We do pre-series A, so there's proof of concept is established. But having said that, if the proof of concept is established, we use our ecosystem now to check for their products, whether this product really works on ground, right? I mean, you may build something that's fantastic. If it doesn't work on ground, doesn't have price parity, does not,
Right.
fit the bill, it'll never evolve into becoming a successful business.
Right. That's important. What else is important? So execution capabilities, background in engineering, so that you understand the product. At least if you're talking about components.
Yeah.
What else would you look for?
Well, I'd say that the other thing that I'd look for is that the founder has resilience and clear vision to for I mean, being a founder is not easy. I would, they have one of the toughest lives that I would really say. Put it out there. Not something that. I mean, every VC knows this and probably agrees to it as well. But it's definitely very difficult to, continuously execute day after day. So the top most, characteristics we look at is resilience. Every day is a different challenge.
And how do you judge for resilience?
With numerous conversations, if he bears with us or not. Probably. So,
Because it's also not taught,
yeah.
right? Typically, even if you're in engineering or B school, it's not something which is taught,
No,
even in
no,
schools also,
no.
right? So this comes down to then different mental models, right?
Yeah.
Right. What Charlie Munger calls mental model. Like, how do you think? Basically, it comes down to that. So I think it's difficult to judge that through conversations. No, it's just I think how many times. I mean, probably you meet the founder 3 times, 4 times. In total, you may have like 10 hours of conversation. Let's say.
Yeah. So it's not only about meeting him, right? Each investment, if you look at it from start to finish, from our first conversation to the end, would at least take 4 to 6 months.
Correct.
Right? Over that period, what's very important is we see what he's doing in those 4 to 6 months. It is enough to understand whether he has capability to execute, he has resilience, he talks the walk. Right? It's fairly simple, and that's one of the primary reasons why it takes time to make an investment. But this is factual, and at some point, there is a judgmental call. With the number of people we're meeting on a regular basis, it becomes second nature over time to start understanding the intentions, the understanding, whether what he says is what he does or what he does is what he says.
So to be a good VC professional, then you need to be a good judge of people, to understand people and their motivations.
Not only that, right? You need to understand numbers. You need to understand business models. So, we're digressing though. But to be a good VC professional, you need to really. I think it's an evolution of yourself. Right? You don't learn every skill on day one.
Right.
Like even when we started our careers, we didn't learn every skill on day one, right? We mostly thrashing out numbers, understanding business models, and over time this evolves. So it's one of the only industries that is front facing and back end simultaneously.
Correct.
So though the team obviously speaks to maybe 1,200 people, the point is we probably don't, but if you really look at it, we meet so many people on a regular basis. We have to build relationships. We have to, understand what some of those relationships will bring, will not bring. Some of those relationships become really strong, especially with, some of the founders that you invest in. So also understand that in a short span of time, whether this is executable, not executable.
All right. Interesting.
So it's let's say it's analytical conversation.
Always.
Yeah. Slightly,
So the guard is always on, like you're trying to navigate different things.
I won't say it's the guard. I think it's a spotlight, Second
Really?
nature, becomes that. You're always, you tend to read into many things as a conversation.
Right.
Try and understand whether, and obviously, so you may like founders. We've met a lot of founders that have over exceeded expectations, right? We've met founders that have not over exceeded, not done that well, etc., but have turned around. So I'd say that once a founder jumps into this game of creating a company, he's an entrepreneur. It changes the entire dynamics because he's putting a lot into it. So the background that you come from, what's the motivation, what allows you to kind of create the company. It's not that we list it down. It's just something that you have a knack for, and it comes over time. But everything has to align to create a successful company.
That's why it's so rare, right?
Yeah, it is. I mean, it's not easy.
Not easy. Yeah. I was recently reading this. Rahul Chandra from Markham Ventures has written this new book about different founders he has worked on. So he obviously doesn't give the name and their companies, but he gives the founder persona, right? So I think he gives these examples, like you're saying, like he goes back to, let's say, somebody grew up in an industrial town in Jamshedpur, and then why that kind of family background shaped his personality a certain way, and then he goes to college, and then he becomes a founder, and all these things tie up later when he is under stress and he's able to block out some things and still stay focused. So it's not normal. As a founder, I'm saying.
The question that is more relevant, or let's say to you, is how do we assess that? Right? Both the founder personality is definitely, I mean, it's definitely shaped him, right? And we need to find, or let's say we need to find the diamond in the rough. It's as simple as that. And we need to figure out whether, it's actually shaped him to such an extent, him or her to such an extent that they have the resilience to continue. And hence, resilience is very important. There will be tough calls, difficult decisions, nights without sleep. There will be, I mean, days when you don't know how to pay this month's salary to your team. You've created a 50-member team. What do you do? So, I mean, there are a lot of ifs and buts, pros and cons that go into, let's say, creating a company. And the only factor that, that allows you to, let's say, strive through all of that is resilience.
Yeah, yeah. I was recently meeting a CEO of a listed company in media space, entertainment space. They do few thousand crores of revenue. So we are having similar conversation. He's also has been investing as an angel large checks directly onto the cap table of some founders, right? So he suggested, that we should do like a psychographic analysis of every founder you want to win. Then you will miss a lot of things, right? Because then your venture building is non-linear and you're putting this screener over it that only if this kind of personality comes, only then we'll fund it. But you never know. It's not that simple, right?
The cycle is so long that we have to wait to see the result.
Right.
And
sometimes the founders also change. They go through immense growth. I meet a founder and then I meet them probably 2-3 years and then they're like a different person. I mean, the core is same, but he's like evolved.
Absolutely. I mean, he's learned it the hard way.
Right.
There's no easy way.
Now going back to EV, one of the debates or one of the benefits of EV is with regards to pollution, environment, sustainability, right? Sustainability has become such a broad overarching theme over last at least post-COVID. I see sustainability, especially in the early stage ecosystem. So how do you think EV plays into the whole narrative around sustainability, pollution? One of the perspectives also that since we are largely thermal power generation kind of country, we are just moving the pollution away from crowded cities to wherever the power plant is, right? Because we are still burning coal. So what is your perspective?
Rome wasn't built in a day.
Yes.
Right? Every industry will go through its phases.
Yes.
We're definitely interested in increasing our renewable energy capacity, as we discussed earlier about energy storage, etc. I mean, I think that this industry allows for that development. The question marks around this is mostly, why is it not there today? That is where the problem is. Nothing is going to be there today. everything will evolve, right? We at least have 20% capacity that goes into the grid. We have 40% installed. We're trying to shift into that. It's going to take its time, and we're continuing to, let's say, install more renewable energy capacity. I can't say that I will not do electric vehicles or we will not move into electric vehicles, because today I don't have 100% renewable energy capacity. Or let's say, source of energy is not 100% renewable energy. We would like to think of it as backward integration and forward integration, right? I mean, you need to have both pieces evolve together slowly. So it's not that if or why, it's when. When will we reach the stage? When will we have larger portion of electric vehicles on the road, and when will we have this being supplied by renewable energy?
Right. And as the share of EV vehicles grows across categories, two-wheeler, four-wheeler, commercial, what happens to the legacy OEMs? Will they also shift, or will they take bets? For example, Hero has exposure to some player and then some other player indirectly taking stake.
So I think that has already begun, right? We've seen it over the last couple of years.
Right.
Legacy players, large companies, they take time to evolve. What's most interesting is any conversation that we've had with either an legacy OEM or their, let's say, tier one supplier, etc. None of them are saying that no, we don't want to do EV. They're just saying that, listen, our existing business is pretty large. It's cash flow generating. How much resource can we put on an industry today that's 7%? Is where the question is. But we want to watch this industry. It's on our radar. So if you look at it, when disruption happens, it happens in this manner itself, right? When somebody turns a blind eye and somebody from behind is suddenly creates a large organization that takes over your market share. The economics is substantially better, just from an economic standpoint. India is a price sensitive market. I don't see a reason why people will not shift to EV if we have the infrastructure, if things are set up, and we have the supply. Today, I mean, from what we learn from our portfolios, the supply is a constraint. It's not demand.
Got it. That is because of the downstream dependencies on raw material and other things.
Not because of manufacturing itself. There is limited manufacturing in itself. There is all limited, let's say, viable manufacturing products in the market that are not available, right? I mean, let's say a plant capacity is only 1,000, vehicles a year, or 1,000 vehicles a month, but you need 2,000, right? And you may have, 5 companies, but out of those 5 companies, 3 companies are not worthy or their product is substandard.
And for that capacity, you think the money will come from VCs or other kind of investors?
So we're only catalysts, right? We're obviously early stage catalysts, so we're able to, get them to a certain point. But I think that obviously the best form of money is from your customers. But as the industry grows, these companies are potentially cash flow positive companies. They can recycle their money. They will always need, but for growth, they will need capital. And a lot of that capital may come from investors. It will also, and because being cash flow positive, debt will play a big role. But if you look at it historically, debt has always been a large form of capital or source of capital that has allowed companies to grow, legacy companies to grow. So we can never ignore debt. But these companies inherently being cash flow positive or unit economics positive, at a certain scale, they will start throwing back cash and debt will become amply available.
So that will come from, deepest pockets like banks, NBFC.
Yes,
Yeah.
absolutely.
That's the deepest
Yes.
pool of capital.
Yes.
For audience watching, VCs are like enablers, but that's the deepest sea.
Yeah. I mean, you cannot replicate every form of capital,
Right.
and you cannot, let's say, even substitute every form of capital.
Right. Because then cost of funding, expected return, all those dynamics are different. If you look at the risk return spectrum, every asset class has a role to play, right? So my next question to you is about EV adoption. What do you think are some of the problems from the consumer side and how those problems can be addressed?
As we all know, right, adoption is taking place on the commercial side, but consumer side is the larger market. I think main reason is obviously range anxiety, access to infrastructure. Today, in your complex, if you want to buy an EV car, you're like, okay, fine. I mean, where do I charge it? Can I take it outside the city? Where will I get charging stations? So infrastructure, tantamount to range anxiety, and some pieces of, let's say, evolution of technology that can solve for this is what is important. We definitely believe that over time, battery technology is going to evolve to such an extent where you will be able to run, higher number of kilometers. Every aspect of this space is evolving still.
Right.
So for a consumer to buy, electric vehicle, I think right now they just look at it as a second vehicle or a third vehicle. It's not their primary vehicle. In order for it to evolve into being a primary vehicle, we need, infrastructure capabilities, better technology. These things will, let's say, 4 or 5 years later, we will see see these things, let's say, in place. And we've also, tried to address this in one of our other white papers that we did earlier, was how interoperability will help this piece.
How do you define interoperability?
So commercial players right now, they create charging stations, etc., near warehouses, where they need the charging.
Yeah.
Over time, commercial players will start creating charging stations, etc., across other areas, and it will evolve. It will, let's say, grow. It may not be, let's say, in the route of a consumer, but cities are expanding. So having said that, they will eventually come in the route of consumers, and those charging stations can effectively be utilized. Charging stations, swapping stations, whatever let's say, energy distribution plays can be utilized for consumers as well.
Right.
It's something that is potentially possible, and how we see things may evolve. We'll obviously have a mix of technologies evolved. So consumers will over time have choices whether they want vehicles that swap their batteries, whether they want vehicles that charge their batteries. Different price points, I believe, may be present. But still, obviously, speculation to see how this industry grows.
Right. So range anxiety is one thing which you highlighted, and second is the charging infra.
Yeah.
So a lot of
charging, swapping, whatever.
Swapping.
Yeah.
So investment will come from,
and I think,
private as well as other.
Yeah, I mean, the other aspect is charging infrastructure. Let's say CPOs today are, let's say, operating at less than 5% capacity, which is not viable. If they've operated that capacity, how can they build a business out of it?
Right.
And that primarily means that, yes, they still can, eventually have more, vehicles charge on their platform. Like all 5-star hotels, etc., have, charging points. But we still don't have, charging points in every buildings, every complex.
Yeah.
So there's still a gap. Now, but you will always see the charging stations, etc., at near warehouses are utilized. That's because of the use case. The other aspect is obviously the sweating of the acid. For a consumer, the vehicle runtime is very low compared to a commercial,
Commercial vehicle.
right? And that can over time be addressed by battery prices falling, better technology, cheaper vehicles. MG has already launched a very interesting program that they did. Is they're saying that you buy the vehicle and battery is is a service, or we are not selling you the battery, though the battery is part of the vehicle.
Okay.
Interesting step, but I probably feel in the right direction. I may be wrong, I may be right, but this is this probably can create a base for swapping infrastructure for the four-wheelers, etc.
For personal vehicles. So after a few
Yes.
years, I can go back to MG and they can replace that battery.
No, so the way I would like to look at it is that the reason they don't want you to purchase the battery is because the battery is not yours. Right? Now, when you do not purchase the battery, the problem is if you have a swapping infra for larger vehicles, and I don't know if you've heard of NEO,
I think I've heard of it.
right? NEO has swapping infra. They've now opened one in the UAE in Abu Dhabi, the first one, and then they're opening in Dubai as well. China obviously has multiple. Ampel in the US also does this. Right? These technologies are under, I mean, NEO's technology is developed, but technologies in India also are under development in this stage. The fact being that how is this going to affect the consumer behavior? Now, first things first, if I buy a vehicle, I will say this battery pack is mine, right? I mean, I own this battery pack. Now, but once it goes into the swapping ecosystem, you can't have control over
Yeah.
your coded battery pack.
Yeah.
So therefore, not selling the battery pack allows you to create for this. Though the motivation may be very different. I'm not aware of obviously internal workings of MG, but the motivations may probably be because a cost advantage, etc. That we're selling a cheaper vehicle, but this can set the tone for creating this.
Got it. Regarding your vision at Caret and EV2, because I think Caret you're doing much broader things.
Yeah.
So anything you want to highlight, what kind of sectors you're focusing on, etc.
So first fund, we obviously were a little more focused, but as I said, we're 3 phases, but the phase 1 of adoption, and we were focused on investing in the mobility space actively. Second fund, where with Caret, where we're investing across, again, mobility, distribution, and employment, is because let's say logistics supply chain or transportation industry requires a lot of manpower, so employment or jobs is very key, and we need upskilling for everything with AI coming into
Yeah.
and having said that, mobility, we're focusing on the components piece, we're focusing on new technology that will help battery recycling plays to let's say the underlying technology players that can help set the base for the EV ecosystem now. That's where the thought process is, and distribution, as I said, use case, multiple pieces. I mean, we're a large country.
Right.
We have to move goods from one end to the other. There is no way that we can ignore distribution.
And what are some of your major bets in logistics and supply chain so far?
So how we focused on supply chain was, as I mentioned, is plant, yard, first mile, mid mile, and last mile.
Yes.
We kind of took again an ecosystem approach. Pieces of logistics, transportation, and agri supply chain. So each piece we've done one investment. For the plant yard, and first mile, we invested in a company called Enmobile, which is a software-based SaaS product that solves for multimodal logistics within plant as well as, your first mile. So we believe that, that that kind of segment cannot be disrupted by, let's say, physical vehicle category players.
Okay.
Because a lot of the vehicles are owned by the plant manufacturers, etc., and those tie-ups are there. We need to create efficiency in that space. In the last mile segment, we invested in a company called Kogos, which does intracity deliveries. He has about, operates around approximately across 300 cities and has about 18,000 drivers on his platform.
Okay.
So, he's enterprise, takes enterprise level contracts and gives it out in each of these cities, wherever, for Flipkart, Amazon, Coca-Cola, etc. So
just to add to this, whenever a founder talks about creating a platform, right? I think it's always more difficult to judge the long-term value, etc., because you're still discussing at idea stage. But when you're creating a platform, it's network effect combined into other things, plus, right? So how do you judge the founder, at least obviously execution and all those things we discussed, but especially particularly for platforms? Because now whenever I see a pitch deck from, let's say, EV founder at early stage, they want to touch fleet, they want to touch charging, they want to touch software, they want to touch all these 4 or 5 different things. And I always get confused that shouldn't you be focusing on a niche? Maybe EV is different, but...
No, I second that thought, right? You can't focus on all pieces.
Yeah.
You have to focus on one piece. And tie up with other players for the other pieces. The issue with this with the EV industry in itself is that without the ecosystem it cannot function. Right? Supposing you create a vehicle, you don't have charging. Supposing you create a vehicle, you don't have, let's say, good battery technology or powertrain. So, but having said that, ecosystem is imperative. We definitely need the ecosystem. So one player needs the other player. Now, for two-wheelers today, battery swapping is very relevant. They find it important to have battery swapping players, but they also feel that charging will reduce their cost.
Right.
So they will use what they have today in the market, evolve, but that doesn't mean that they're going to go set up their own charging stations. So over time, you will see that each segment or each piece has enough meat for any founder. But if you try to do everything, say that I'm going to do a full stack, one, the amount of capital you will require may not be available initially. You may not even get it later. And your scale is stunted. And for an investor like us, scale is equally important.
Yeah, because you're scattered.
Yeah, so if you're scattered, you want scale. But for VCs, primarily, right? Scale is important. I cannot invest in a business that is basically a lifestyle business that, you're building. I'm happy with, slow growth, 15% a year, 20% a year. I mean, if you really look at it, it's very difficult for VCs to make money on that kind of growth.
Yeah.
So I think the dynamics of trying to do everything will not fit into the ambit of a VC investor.
Yeah. And what are your perspectives on, because you've also touched agri-tech and consumer in the past before the EV focus. I'm not sure if you're still doing that.
So in the agri space, we invested in agri supply chain.
Okay.
I mean,
this was through Caret?
No, through the EV2 vehicle.
Okay.
A company called Fambo. What they typically do is they source from farmers and are supplying to QSRs.
So input side.
Yeah.
Sorry. So they take the harvest?
Yeah.
Okay.
They
so the output
process it basically, pre-cut, let's say value added, and then they supply to QSRs.
Okay.
As needed, right? I mean, Burger King probably requires a certain size of tomato
Yeah.
cut.
Same for McDonald's.
Yeah. So similar. I mean, so it's a niche category to target. We looked at a lot of players in this space. We try to see whether it helps in the consumer. Like, can you create a consumer play from your sourcing, which I feel is very difficult, because the moment a consumer comes into the angle, the capital required changes, because you need to, I mean, you're looking at very different metrics. You you need to, let's say, acquire customers on a regular basis. It changes the entire dynamics of, let's say, your investment.
Yeah.
But B2B players are very different in this in that
Yeah.
aspect. They're like you crack one store, you can replicate that entire model through their entire store within that region. So your processes can be standardized. And if your processes are standardized, streamlined, you can achieve economies of scale, become profitable. Dynamics are very different.
Right. Because in consumer space, there's no such. The atomic unit is very different, right?
Yes.
Because every situation
Yes.
is different.
Yes.
Even in the same geography.
Yes.
Yeah. So from consumption side, we were just debating this with our team yesterday or day before yesterday. So we were looking at probably G20 economies and looking at consumption as percentage of their GDP, right? So US is around 70% of their GDP is consumption. Second is India. In terms of proportion, we are about 60%, 65% of total GDP is consumption in India, right? So I don't know, for investors, early stage investors, is that a good thing or a bad thing? Because we are still a lower middle income country, largely services driven. Our manufacturing still remains very weak. So we are more prone to demand side shocks because consumption is 60% of the GDP. So anything disturbing that can have multiple ripple effects very easily. So that's what you're trying to understand. So from early stage consumer investment perspective, how do you look at that? That consumption is contributing a large part of our economy.
So we've not been looking at it for a few years right now.
Okay.
Because of obviously focusing on the B2B space, but consumption is, I mean, we are 1.4 billion people. The mistake that we always make is that the entire, let's say, consumption story there. I think the metros tier 1, tier 2 is probably where it is. Below that, it changes. The dynamics are very different.
Yeah.
Your product profile is very different. So if we need to, and just an over the top kind of thought process here is, if we really need to target that, you need to have multiple product categories that can cater to those demands and different price points. Though today everybody has a mobile phone, so I think that's huge advantage. UPI is there, so we definitely have the makings of reaching those customers, or let's say makings of increasing consumption in India. But what and how are the two questions that are still to be answered, right? What product will work and how will that product reach you?
I'll ask you two questions. One is, what is your outlook on the early stage investments in EV ecosystem in India? And second is, any advice for founders who want to come into this as a first time founders? Let's assume they're coming without any experience.
What is our viewpoint? I think we've spoken about that
Yeah.
a number of times in today's conversation, is where do we see how this industry is going to evolve, etc. So I continue to think in that manner, that yes, we feel that the evolution will go from commercial to consumer over the next 15 years. It's going to take time. Let me not say if, I say when the industry kind of matures. we've seen green shoots of that. So we're pretty happy with 7% penetration today. And as I mentioned earlier as well, that there is huge demand. Supply is the constraint. So I think we're still trying to meet the supply-demand gap, which is great for the industry today. So definitely shows that there is potential for this industry to grow. Founders who are coming to now, whether they're first-time founders or whether they're first-time founders in this industry, there's two different aspects.
Both. Let's go.
But I think that founders who want to target this industry need to be very focused on creating something that has IP and not look at, just run-of-the-mill business models or run-of-the-mill kind of products. It is a product asset-led industry. I mean, the vehicle is an asset. You have to understand the asset. Everything around the asset is what is important. So whatever you build, I mean, there is some sort of, let's say, operational capability that you can build over time. But I think that piece is over, as far as I understand. There are people who had to build certain capabilities in certain segments, have already built it. I do understand that, yes, India is still a very large market. You may be able to target a different, let's say, geographical location, create a substantial business and try and capture it. But that will result in price wars, maybe consolidation, either or, right? What's more important or what's more relevant is that if you're actually going to start targeting a product category, then are you building IP around this? And that is going to be extremely relevant for success or failure.
Got it. That's helpful.
Yeah, it's one of the first questions we pretty much almost ask.
Right.
If they come with the product, we say, what is the IP? So it's pretty apparent that we're focused on having IP around the product.
Right. Yeah. I think that's also tells you a bit about, how hard have they thought about the problem? Have they tried to solve anything real?
Yeah.
Versus just, flipping something or creating a front end and just trying to make quick buck.
Yeah.
That's a different mindset.
Yeah. There are various business models, right? I mean, there are, as you mentioned earlier as well, right? There are multiple pieces of this segment, industry itself. So multiple segments will have different kinds of product plays. Now, whether it's, physical product or, let's say, tech product, it just depends.
Well, yeah, thank you for sitting down with us and coming down to our office and having this conversation. Hopefully in future, we'll sit again and discuss more in depth about EV.
Well, yes, absolutely. We will have this recording. We'll know, some things, how they evolve. And, thank you, Kulmani, for having me. Appreciate that.
Thank you.